financing costs are super expensive. It's what's keeping a lot of the top neo clouds, their profit margins are very small, and it's because they're
Yes.
paying these huge costs per chip every year. So by saying that there's a person willing to buy this hardware in 4 years, it's certainty. And with certainty, there's less risk, and with less risk, you get charged less.
Welcome to another semi dope podcast. I'm Vikram from Vik's newsletter on Substack. With me is Wayne Nelms, CTO of Ornn. Ornn is building a financial exchange for trading GPU compute as a standardized commodity. Think of it like a futures market for compute power and more recently memory too. So we're going to talk about it in this episode. So Wayne, how you doing?
I'm doing well. How are you?
Pretty good, pretty good. I heard you got back from PTC in Hawaii.
Yeah,
How was that?
it was amazing. Just got back late last week. Unfortunately, the flight back was a little rough. There was some stops for weather, and I think the brakes on the plane weren't working. But got back safe and sound to cold New York. So yeah,
Yeah. Was the weather warmer in Hawaii?
way way warmer. It was t-shirts and actually Hawaiian shirts and khakis every day. So
Yeah. Now you're back to your heavy jackets, I suppose.
yeah, exactly. Exactly.
Awesome. All right. So, like, how did you get into the idea of starting a financial exchange for GPU compute? It sounds like a great idea, but like, how did you even come across this thing? And give us some background of how you got into this.
Yeah, sure. So I can give you the full rundown. So, I graduated not only just last year. I graduated in December of 2024, a semester early from MIT. And there I was studying math and computer science at school. I was on the tennis team. I was a big tennis player in high school as well. And then I got into poker in college. And so, pretty much after I graduated, I was trying to figure out what to do. I started working in trading. So I was a quant trader doing equity options at Susquehanna or SIG in New York. And I love the job, but at the time I saw all these companies, all these Bitcoin miners that were evolving their business models into GPU as a service. So if you know Iron and TeraWulf, then CoreWeave, most famously, I guess. And I kind of saw their stocks take off, and I was wondering what's going on here. I have to figure out what is a semiconductor, what is going on. So I took some time, did a bit of research, and went to one of my closest friends at MIT from school. We had known each other for 4 years. His name's Kush Bavaria. He's the current CEO of Ornn. But we are just trying to figure out what to do. And at the time, I was doing a little bit of stuff on the weekends with a friend in private equity, kind of talking to him about what they were doing every day. And he told us, both Kush and I, that they were looking into data center deals, but they didn't really know what was going on. They didn't know how to measure risk. And this theme kind of was the genesis of what Ornn is today. It's how do you categorize risk in the data center space, in the neo cloud industry? What is the value of compute? And then we kind of took that idea and ran with it, using my financial background, and Kush has a background in venture and startups. So taking our unique set of skills and then coming together to try to solve this issue.
That's awesome. Actually, that's an important question. Like, what is the value of compute? Because now, you have the era of like agentic AI, and you have Claudebot that's like taking over all people's computers. I suppose now people are trying to buy Mac Minis. So
Exactly.
compute has somehow landed up in the edge all of a sudden. So that the question is always, what is it on the cloud and what's the value on the cloud and things like that. So yeah, it's a very important question. So basically, what financial infrastructure exists for AI compute today, or is there no such thing? What's out there?
Yeah, so we're still in the very early stages of all this stuff, of the financialization or commodification of compute. I would say there's a few startups that are focused on trying to standardize it. So you have people that are actually focusing on the offtake, like SF Compute, those sorts of models, and they have standardized compute in a sense, right? They have a minimum benchmarks for your compute that you can resell on their platform. And then there's also a few businesses like ours that are, tracking prices of compute across the country, based on provider, based on, chip type, networking, etc. But in terms of actually being able to trade it, which is the next step, right? We can track it, build indices, and look at how numbers move. But if you can't trade it, if you can't, hedge your actual operating expenses with this number, I would say the value is minimal. So what we do at Orn is we actually allow you as either a data center, colo operator, neo cloud, or on the flip side, right? If you're buying a lot of compute, if you're a lab, university, hospital, we allow you to actually take positions against this number or on this number, and that can help you, materially hedge some of your operating expenses. So I can give you a brief rundown, a brief example. So
Yeah.
let's say you're a lab, and let's say you have a long-term contract, of course, 3 to 5 years, let's say. But let's say you have some inference demand, and that demand is very spiky. You can't really predict for the inference demand, so you need to buy some compute on the spot market, let's say. And the spot market meaning right now, I need it today. Um, a lot of the time, if you're buying a lot of compute at once, it can drive the price up. That's just how markets work, right? Supply and demand. What people need right now is a way to hedge the price. So if I'm buying a lot of compute at once, I want to be able to protect or put a ceiling or a cap on how much I'm paying. So what we do is we allow you to buy a feature on our platform. It's fully cash settled, meaning when you buy a feature on Orn, you don't actually get the GPU hour. But what you do get is a way to hedge your cash risk. So if the price of the index moves up because you're buying a lot more compute, you actually make money on the hedge. So in effect, you're capping your upside and your payment. And on the flip side, if you're a data center and you're selling a lot of compute, you can sell a future on our platform and put a floor to the price that you're selling all of your compute for. So it works in both ways. And we've seen a lot of people being interested in this product because in every single commodity space, if it's oil and gas, electricity, this sort of product exists because there's a lot of people buying today or tomorrow, and they care about putting a cap or kind of a collar, we call it in finance, on their prices, their costs, and their revenue.
Awesome. All right. So for like basically GPU pricing, let's take an example. So I know it varies depending on what kind of surrounding resources you have with the GPU compute that you're going to rent out, for example, on the spot market today. Like I want to run a little, fine tuning run on a model, and I need some compute to do that. So let's say we pick, I don't know, an H100 or a B200 or something. Take your pick. What is the pricing example? Like, is it $100 an hour? Is it $10 an hour? How does that spot market number look like
Mhm.
between a few providers? If you have any numbers to put out there, I think it helps understand, even for me, where this is coming from.
Yeah, sure. So we track a variety of providers. So let's just say H100, SXM. That's one of the models that we think about the most as a benchmark. So, on in marketplaces, a lot of the marketplace pricing is a bit lower on the lower end. So we have roughly around $1.70, $1.80 today for an hour on the H100 GPU.
Okay.
But as you move up the stack, so I'm saying, neo cloud level pricing, so call it the CoreWeave, Lambda, Crusoe, Nebius, you're getting around, $3 to $4 range. And
Mhm.
then if you go up to, the AWS, GCP, you're looking, $5 to $6 to $7 range. And so, part of the problem when you think about standardizing compute is you know, how do you standardize across all of these providers? Because each of them is kind of providing a different level of service, potentially a different level of quality, uptime, sort of these benchmarks and metrics. So what we do is we exclusively think about the marketplace. So closer to the quote unquote lower end of the spectrum, and at least in terms of cost, because we think that these marketplaces are a more realistic example of how a spot market should work, right? There's a lot of people that list compute, there's a lot of people that buy compute. The market is very dynamic. When you start looking at these hyperscales, the truth is the prices don't change very much, right? They might decrease their costs or increase their costs every quarter, once a quarter, twice a quarter potentially. And we don't think it's a true reflection of where daily markets are moving. As a product that tracks GPU hours, we want to have our index be as dynamic as possible and allow you to have real exposure to the truest form of on-demand compute. So we track marketplace compute.
Gotcha. So for the same H100, depending on where you're running the actual hardware, the price actually varies, right? Is there a reason for that? That's my first question. And the second question I have is, how do you standardize a fixed price if everybody is charging different rates for the same hardware?
Yeah, so a lot of the differences comes down to the hardware itself, as well
Mm.
as the regionality or where is the compute or the GPU actually located. But these are problems that have been solved in the electricity markets as well, right? So in electricity markets, the way it works is that you have hubs, and each hub is a location, either in the US or across the world, which has a different price for the same electricity. And for compute, for powering a GPU, electricity is a huge input cost. So you can only expect that this regionality bias in electricity should also be analogous to the regionality bias in compute. So what we do is we consider only the compute in a certain region of the United States. And we instead of kind of trying to standardize across the entire country or the entire world, we say, look, we only will track a specific type of compute in a specific region. And that allows us to maintain kind of uniformity across our product, allows your hedge to be very specific, and as a result, hopefully, makes your hedge a way better product for you and your business.
Gotcha. So, going back to the example of where I was going to rent an H100. So now through On, let's say I can uh, purchase a certain amount of compute at a
Mhm.
certain price that is determined by the On index that you determine through the spot price market. Is that right?
Yes.
Okay. And so basically, so now that I have this bunch of compute, now let's say the next quarter rolls around and the compute prices go up. And now for the same, because I kind of bought compute at a certain lower price, I'm doing better off now because I was able to get in early and get my fixed rate. Is that's how it works, right?
That's roughly correct. So yeah, I can pretty much how it works is that the futures, the way it works is you're
Yeah.
buying it today for a time in the future. So what you can say is, look, I will be buying a lot of compute in, let's say, February of 2026. So what you can do is you can go on our platform. There's a February 2026 future, and it has a price. Let's say $2.
Hmm.
You can buy that future for $2 right now. And what it does is it exposes you to the spot prices in or across February. So if we get to February 1st and the price of our index is $2.01, and then on the 2nd of February, it's $2.02. And then let's say it goes up and down around $2.05 across the entire month, you're buying compute across February because that was when you need to compute. However, because you bought our future for $2, you effectively have locked in your cost. So even if compute prices went to $10 or $20, it would ideally never happen. But if it went up significantly, it wouldn't matter to you because you already bought the Ornn future. So what we're doing is effectively putting a price cap on any compute that you would be buying in the future.
Gotcha, gotcha. And so, what determines this spot pricing, let's say, of $2 in the beginning of February? What are the factors that kind of go into this pricing to begin with in the markets? The market set this value, right? Somehow.
Yeah, I mean, it's purely supply and demand, right? And it all boils down to that. So
Yeah.
just how many people are offering H100 hours in February, and then what is the demand from both, the research, the training, and the inference needs of the community um, of AI users, right? And that's kind of how every single market works, and that's why we love and we've tried to bring all those financial concepts to compute because at the end of the day, there's huge supply constraints in this market and also huge demand. And in any sort of resource of human history in which this sort of dynamic existed, financial markets have closely followed. So we just believe that, we're at a stage in which there needs to be a financialization of compute, and we're trying to build the first kind of take the first steps to make that possible.
That's awesome. So when you talk about supply and demand, with these massive hyperscaler build-outs these days, all you ever hear in the news is essentially how much there is a shortage of this, and there's like always an over demand and an undersupply. So, is there anything holding you back from extending your GPU compute as a commodity concept to other parts of the AI infrastructure market? There's memory, there's storage, there's lasers, there's like optical fiber. Is there anything stopping you from extending all the way across the chain?
I mean, no. So there's definitely a lot of things that we are thinking about rolling out in the near future in terms of, components in the AI supply chain, just like memory. So what we recently did, so thanks for bringing it up, is we have memory features now. So if you have an opinion on the future price of DRAM, DDR5, DDR4, as well as SRAM products, you can trade that on Ornn. And these are products that we recently launched on Architect with Brett Harrison. And this is a feature that we think needs to exist. So there's obviously been a lot of talk recently about this the skyrocketing price of memory, right? Memory is a
Yeah.
huge input into a chip. It's very necessary for compute, and people want to have access to memory in the future today, right? And so that's exactly what a futures product is made for. And you can see future demand right now on our product. Memory is trading way higher than what any of us could have expected. And hopefully some of the existence of our product will alleviate some of those future demand concerns.
Yeah, that's awesome. So that's memory is like so important. So memory is one of those things right now where it's a clear example why you would want to hedge your prices and lock it in at a lower price, because it's like it's insane, right? The memory is a great example of why or how futures markets should work, and how people should lock in or be able to hedge on these prices. So, but that's awesome. Yeah, you mentioned one thing about Architect. So do you want to dig in a little bit about your partnership with Architect Financial? Because it was
Yeah.
in the news recently, so I think I'll let you explain what that partnership is all about.
Yeah. So before our partnership with Architect, we on Ornn's dashboard or trading platform, we allow you to trade swaps. So what a swap is, it's agreement between two parties, in which one party takes one position, let's say buying the future, one party takes the other position, selling the future, and it's a one-to-one matching in trading. So it's a bilateral swap. On Architect, the beauty of it is it's a perpetual exchange, and what that means is not only are you exposed to the daily price every day, so it's like buying a stock almost. If it goes up, you make money. If you're buying it, if it goes down, you lose money. If you're, if you're buying it, but it also allows you to match many to many or one to many. So if there's a big seller right now, we have to match the big seller to one big buyer. If that makes sense.
Mm.
On Architect, if there's a big seller, Brett and his team at Architect can match them with a bunch of small buyers. And so it
Hmm.
makes this market way more, representative of, true markets. And this is kind of what the future of Ornn might look like, but also just the future of compute trading in general.
Okay, okay, awesome. I mean, so you have like basically two things we have discussed so far. Looking at it, it's like compute is one thing, and compute is based on, let's say, hardware. And like H100 was an example we spoke about, right? So there's been a lot of discussion about how long an H100 is actually useful. What is the useful life of an H100? And if you look at that in that sense, the more time passes by, maybe H100 compute should get cheaper over time. Is that right? Is that a right way of looking at it?
There's a lot of factors that are involved, but I would largely agree that we expect that H100 prices will fall over time. However, what I will say is that we've been tracking, H100 pricing in the spot market, um, with our index for the last year and a half or so. we've also been tracking A100 prices,
Mm-hmm.
in the spot market for the last year and a half or so. And what we've seen is that A100 pricing per hour has remained relatively stable, if not increased, over the last few months. And so we believe that this could also be a potential path for the spot price of H100s. So I think there's a lot of questions and there's a lot of factors that are involved here, but it's really going to come down to in the near future, inference demand for older generation of chips,
Mm-hmm.
just like for A100s, potentially V100s and H100s.
That's awesome. What do you believe is the way GPUs depreciate? Like there's so much discussion about whether it's a 5-year depreciation period or whether it should be counted as 2 years. And Michael Burry actually on his Substack kind of came in with a bang with this whole discussion, and people have like so many opinions. What's your opinion?
Yeah, so first of all, I want to shout out to Michael Berry. I love The Big Short.
Yeah.
It's really interesting. So I think there's a difference between useful life of a GPU and the prime life of a GPU.
Hmm.
And I think a lot of times when we think about and when people say what is the useful life of a GPU, it kind of implies that after 5 or 6 or however many years, that this GPU is just suddenly worthless. It's just scrap metal, right? But we've seen with A100s that that's not the case whatsoever. There's always a use case. Someone's always going to need that piece of hardware, that piece of HPC equipment for some use case, right? So there'll always be some residual value. So I think the prime life of an H100 or of a B200 or of a Rubin, you know, I think 5 years could be reasonable. I think it's probably closer to 2 or 3 years. But I think when you think about the useful life, how long is a chip actually going to be in a data center for? We need to be thinking longer term here. It could potentially be 5, 6 to 10 years, just having relevance in the market. So I would, if I had to model this out, right? I come from a trading, quant background.
Yeah.
It's definitely not linear, and I think that's the biggest mistake that people are making today, right? If you think about how is it depreciating on a financial model, if you had to map out the profitability of a data center, right? A lot of people are thinking about this in a straight line depreciation, aka the GPU loses the same amount of value on the balance sheet every single year. I think that's a very naive assumption, and I'm almost certain that no one thinks that's exactly correct, right? I think what is reality is that a lot of the value is lost across the first 3 years, and then the remaining 5, 6, 7 years are fairly flat or fairly stable. So at Orn, one of the products that we haven't talked about yet that we're doing currently and we're spinning up today is a residual value product on the GPU. So this is very interesting, right?
Okay. Tell us more.
Yeah, what this allows you to do as a data center or as a neocloud is sell your GPUs in the future
Mm.
for a certain price. So I can give you an example of how this might look. So let's say you just bought a few, let's say 72 racks B300s, right? And let's say you're a data center operator or a neocloud and you built these and you're installing them for a certain client. You have a tenant that has a, let's say, 4-year contract with you, right? So they agreed it's a take or pay model for 4 years. They will pay for this, for access to this B300 cluster. The issue is after these 4 years, there's a high likelihood that, maybe Rubens are in production or there's a better chip available for you from an efficiency standpoint. And if that's the case, this tenant that you have for the first 4 years might not renew the contract, right? So at the end of the 4 years, you as a neocloud want the optionality to sell that cluster to someone else, to pretty much get rid of it, to clear the space in your site so you can install different types of GPUs or something else, just to re-outfit your site. And so what we do is at Orn is we give you a price today for that hardware in 4 years, which helps
Mm.
facilitate that easy transfer of hardware. It helps, clients have access to better chips, and it really helps create the market that is necessary for an efficient marketplace.
That's a good explanation. So, the way you describe the depreciation of the GPU is kind of more like buying a supercar and driving out of the showroom. The moment you drive it out, it rapidly drops its value, and then your McLaren is still probably worth it, or your Lamborghini is still worthwhile. I mean, it has a value. It doesn't ever go to zero, right? I mean, is that like a very naive analogy, or is that even remotely what you're describing here?
Yeah, I would say, yeah, that's roughly correct. Like,
Okay.
there is a huge depreciation, kind of
Yeah.
drop first 4 or 5 years, yeah.
Yeah. So what people would want to do is they want to get the best hardware for their training runs initially, and that's what you were saying, that a tenant is going to get in on the best hardware that a neo cloud has built out in a certain space. And then once they realize, or they have moved on to the next generation to train the future models, which is what the tenant's main business objective might be, the same facility can be used by someone else to maybe run inferencing on, and the compute is not entirely worthless just because the original tenant has left the building because they didn't have access to the best hardware, right? And
That's
so,
exactly.
yeah, so what on helps you do is uh, price today what the whole data center would be worth in 4 years from now when this tenant leaves, and so that the next person coming in for picking those same chips up for inference can lock in their rate today. Is that right? Did I get that right?
Exactly. So we just price the
Okay.
GPUs and we don't worry about the switches and some of the networking stuff. But yeah,
Yeah.
we will give you a price for the hardware, the HPC, just the GPUs. Um, yeah, today for 4 years, just like you mentioned. So someone else can come pick them up, use them for another purpose, offload that to the secondary market. And I have a lot of thoughts and about the emerging markets as well. Like where are these chips gonna end up
Yeah.
in 4 years, right? Where H100 is going to be geographically speaking in 4 years. Right now we see a lot of the data center and AI infrastructure build out in America. Will that continue to be or in Europe and in Southeast Asia? Will that
Yeah.
continue to be the case? Will there be, places in South America potentially, in more Eastern Europe, or, potentially Africa, or, now we're saying the moon, or in oceans, in space, right? Or in deep ocean. There's so many places where, data center development could happen in the next 5 years. And it's really up to the resale market, the people that have access to older equipment. It's up to them where this stuff ends up. And I think that's a super interesting space. And we should all be
Mm.
looking at into the resale market for NVIDIA hardware in 2028, 2029, 2030.
So interesting. It's interesting that you said you would not price in the network and all that, but what about power? How do you price in power?
Yeah, so the power, it's a little different, right? Because the power is site specific.
Yeah.
So when we take out the hardware, we're not really pricing for power. However, we understand that that's a huge concern when you're building out a site, when you're choosing a site, especially as the market will shift more towards inference. It's all about efficiency, dollars per token, and that's going to be largely based on electricity prices. So this is definitely a problem in the space that people need to think about. But maybe luckily for me, I don't have to think about that.
Okay, that's awesome. Oh, okay, so this whole pricing, now I think you have the index, right? The on index for whichever commodity it is. It could be GPUs, it could be memory. Uh, who benefits from this transparent pricing? Who benefits from having a fixed index going into the market for, let's say, compute?
Yeah, so I think the real value add really goes to the people buying compute, especially smaller players, right? Having transparency in markets is great for usually all market participants, but I'd say in this specific case, it's largely beneficial for the buyers because I think the way the market currently looks is a lot of people are paying for compute or a level of compute in terms of benchmarking and performance that they might not need. Either they're overpaying, they have too many GPUs themselves that they're not utilizing, or the actual performance is higher than they actually need. And so by showing the markets kind of where the marketplace compute prices are, I think a lot of people are starting to think like, wait, I'm paying X amount more for AWS or GCP clusters or instances. why am I paying so much? Am I actually using all of it? And there's a huge efficiency question for a lot of the smaller players, call it, the hospitals, some of the labs, the
Hmm.
smaller labs, people using it for recreational uses, like the Claude bot kind of community, right? Like maybe they don't need to pay $8 per GPU hour. Um, and so we're trying to bring that transparency to the market first, and then from there allow you to put on the hedges, to do the trades, to think about selling your GPUs in the future. All those products are built on top of that index.
Do you ever so fundamentally the hardware scene is changing so much? You could have in inferencing land, you suddenly have all this talk about SRAM based inferencing, and most recently you have Nvidia announcing context memory storage systems, which are basically just large racks of flash storage, which is extremely good for long context inferencing. So when you are pricing out uh, a data center build out for the future, like you were explaining, like the 4 years out kind of deal, what is the risk from an inferencing provider point of view that the hardware is just no longer relevant and somehow the earlier generation GPUs used for training are simply not somehow useful for inferencing? Is that a possibility at all? How do you price that in?
It's certainly a possibility. What we think about when we price this hardware, is largely from what is the obsolescence risk? So
Okay.
obsolescence risk meaning, what is the likelihood that this GPU will be usurped by a better hardware architecture generation, etc. you know, we're pricing the tail risk. So, we're usually covering between 15 to 30% of the residual value. Okay, if you bought, let's say one chip for $30,000, we're protecting around eight to $10,000 of the residual value. So oftentimes we're covering the very tail ends of the market. And so as a result, we think that, from an inference demand standpoint, this price is still very attractive per chip. I will agree with you, however, that there's a large chance that potentially these chips aren't even used for inferencing anymore. They're just put in an emerging market for training, which is where we think a lot of the future demand will come from. So yeah, it's kind of both of these players would be interested in the secondary market, the inference kind of providers, as well as you know younger labs potentially that are spun up in emerging markets.
Yeah, that's a good point. I mean, I like the way you address this, because I don't think it's obvious that inference is always a byproduct of training hardware, because I think people view this as a downstream consequence. They're like, okay, let's get the best hardware out there, the Rubins and the best Blackwell or the 200, 300, put them in training runs, and when their useful life is done, we just shift them over to inferencing, and that's going to be the future, or whatever. Maybe that's not the case. Maybe with the rise of inferencing, with so many agents now starting to do inference, long context stuff, and people are running, these inference bots on cron jobs, so they basically run forever, or on timers and things like that. The amount of compute you need is enormous. So we might come to a point where we're like, wait, we need more compute and more hardware and better hardware for inference than we do for training. And so the
Yeah.
problem is flipped on its head in a sense.
Yeah, no, that's exactly right. I mean, it's going to be so interesting to see like how the market moves in the next few years, with
Yeah.
like the rise of inferencing demand. I mean, only time will tell, but will be a very very interesting market.
Yeah. Does any of this change how data centers are built out at all going forward?
Yeah, so this is one of like the long term effects that we believe our product provides. So when you think about a futures market, how this actually looks is you can put a price on compute in each month of the year, multiple years in advance. So I can say that, in 2026 February, an
Yeah.
H100 hours worth this, March it's worth this, etc. In
Yeah.
2030, an H100 hour is worth this, right? Which is incredible information. You can kind of plot across, a Cartesian plane, like what the value of compute is. And
Yes.
so when I think about, okay, I'm a data center operator, I'm thinking about what chip do I want in my data center?
Yeah.
One of the earliest questions that, Kush and I had when we talked to data center operators is, how are you modeling your profitability? Right? Like you're spending hundreds of millions, billions of dollars on hardware,
Yeah.
on chips from Nvidia or others. How are you thinking about profitability? How much can you rent out this chip for? They would
Yeah.
tell us a price. Sure. What about next year? They tell us another price. Where are you getting that price from, right? And so with our product, you can actually map out your profitability per chip, per hour for the next 3, 4, 5 years. And that can help you determine whether or not you should even get into the business, whether or not you should build a site in that location, whether or not you should use that chip or maybe the newer generation, right? It's so important and so valuable. And so we think that that in and of itself will help facilitate data center development both in America and across the world. And just to add on briefly, with the GPU value insurance product that I mentioned, where Ornn will come in, put a price on your hardware in 4 years,
Yeah.
that actually allows a data center to do a very similar thing, which is tell their lender, right, a big credit fund, a big backer of their project, look, in 4 years, even if my tenant doesn't renew the contract, I can sell this hardware to someone else. And what that allows them to get is a cheaper financing cost, right?
Yeah.
Financing costs are super expensive. It's what's keeping a lot of the top neo clouds, their profit margins are very small, and it's because they're
Yes.
paying these huge, huge costs per chip every year. Um, so by saying that there's a person willing to buy this hardware in 4 years, it's certainty, and with certainty, there's less risk, and with less risk, you get charged less.
Yeah. That's amazing. We need some of this stuff. Like, all my days go into looking at engineering about these things and how these things are built. So it's really fascinating for me to talk to someone like you who's looking entirely at the financial side of things, and it is so important because it determines how all of this stuff is built out. There's so much money moving around these things. It's just fascinating. How do you think we will look back in 10 years from now and think, that was something weird we did? Or what do you think is like, we're going to think back about the current GPU compute boom in 10 years' time?
Well, I think the first thing is we'll just realize how crazy of a time it was, right? The
Yeah.
Mac Minis, the Claude bots, right? As being able to buy compute, and the price of memory just skyrocketing, right? These are things that um, you know might not be relevant in 10 years, or maybe they are, but it'll be a crazy time nonetheless. But I think the more important thing, kind of going back to something we talked about, is that we'll realize how insane it was for these data centers to be built almost based on intuition or hope, right? Like, oh, I
Yeah.
just hope that there'll be more compute demand, right? I mean, I'm not saying that there won't be more compute demand, but right now there's no numbers backing that up. It's hard to quantify what future demand will look like.
Yeah.
So right now, I think we're in this interesting time where trying to figure out and try to quantify that number itself is so valuable. So looking back in 10 years, we'll be wondering, how were we able to finance these projects, without that sense, without that insight. And hopefully, Ornn is the first step to providing those insights as well.
That's awesome. I think I know I'll be laughing back at the time when Meta started building data centers in tents, and just because they had to build them out fast enough. I think it's like
Exactly.
we don't realize what we're living through now, but it's going to become evident in like a decade from now. That's pretty awesome. Thanks for explaining all this stuff. I think it's very, very valuable to see the business and financial side of semiconductors. And while on this podcast we generally talk a lot about the technical side, my other co-host Austin handles the business side really well usually. So this has been a bit of a adventure for me. So thanks for like putting up with my questions, probably very engineering like as it seemed.
Wait, no, I think, well, first of all, thank you for having me. And I think this stuff will become even more important in the future. Financial engineering and helping these data centers exist will allow and fuel the compute and AI revolution moving forward. So, yeah,
Awesome. So if people need to visit I think it's onai.com. Is that right?
exactly. Exactly.
Awesome. And Wayne is on X at Wayne underscore Nelms with a Z, right?
Yes. Yes.
And so you can follow him on X. And do check out Ornn. I think it's a very interesting uh, financial product that's out there, and it's very important to have futures, just like we've had in oil and electricity and so many other things going forward. Right. That's we'll call it for now. That's the end of the podcast for this one. Thanks, Wayne, for being on, and for all the listeners out there, if you are enjoying this podcast, be sure to give us a 5-star rating on Apple Podcasts or any other platform you're listening to. We also put these episodes up on YouTube or any other podcast platform of your choice. Thanks for listening.